Welcome to our presentation on an essential business topic, understanding the difference between accounting and finance. Whether you're a student, professional, or simply curious about how organizations manage their money, you're in the right place. In today's session, we'll break down these two fields, clarify their functions, roles, and methodologies, and show you how they interact within a business. I'm excited to guide you through this exploration. Let's start by looking at the journey ahead, our agenda for today. Before we dive deep, let me outline what we'll cover. We'll start with the basics of accounting, what it is, its key functions, and who does what in the accounting world. Then we'll shift gears to finance, discussing its core focus and the principal functions it serves. You'll also learn about the tools each field uses and the ways accounting and finance work together in a business setting. By the end, you'll have a clear grasp of how these disciplines differ and how they're both indispensable for any organization. Let's begin with the fundamentals. What exactly is accounting? Accounting serves as the backbone of every business's financial record-keeping. It's more than just numbers on a page. It's the methodical process of noting, organizing, and reporting every financial transaction a company makes. This discipline gives organizations a clear snapshot of their financial health, helping leaders make smart, informed decisions. Crucially, accounting ensures regulatory compliance, so businesses stay within legal boundaries and operate with integrity. Now that we've defined accounting, let's go deeper into its core activities. The day-to-day work of accounting revolves around several important functions. First, consider the recording of transactions. This includes bookkeeping, the habit of carefully writing down every transaction in journals and ledgers. A fundamental aspect here is the double entry system, where each transaction impacts at least two accounts. This approach keeps the balance between assets, liabilities, and equity. Next, there's financial reporting. Accountants prepare crucial documents like balance sheets, income statements, and cash flow statements, which collectively offer a comprehensive view of financial performance. Accompanying these statements is disclosure, which means providing extra details in notes so stakeholders get the full picture. Compliance is another key area. Accountants make sure organizations follow standards like GAAP and appropriately manage tax filings, keeping everything above board with federal, state, and local laws. But these aren't the only accounting duties. Let's look at more specialized functions. Auditing stands out as a cornerstone of accountability in accounting. Internal audits check if financial practices match company policies, while external audits involve independent checks to guarantee accuracy and adherence to regulations. Accounting also handles budgeting and forecasting. Preparing detailed budgets is vital for planning future financial activities, while variance analysis compares real results to those projections, helping organizations understand and address any gaps or surprises. Each of these roles works hand in hand to keep organizations on track, so who actually performs these functions? Within the accounting world, professionals take on specialized roles to ensure accuracy and compliance. Accountants themselves manage everyday transactions and keep financial reporting precise. Auditors, both internal and external, verify that records are accurate and conform to regulations, acting as quality control checkpoints. Controllers oversee entire accounting departments, maintaining the integrity of all financial reporting processes. For businesses looking to navigate tax complexities, tax advisors step in with dedicated planning and strategic compliance support. Now, let's explore the methodologies and tools that empower these professionals. Accountants rely on distinct methodologies to record financial information. Accrual accounting records revenues and expenses as soon as they're incurred, regardless of cash movement. In contrast, cash accounting only recognizes these figures when cash actually exchanges hands. Both methods offer unique insights and serve different purposes depending on the business context. Accounting software is indispensable. Platforms like QuickBooks, SAP, and Oracle streamline record-keeping and reporting, allowing teams to focus more on analysis and strategic advice. With a solid grasp on accounting, let's examine finance, its definition, and where it's heading. Finance goes beyond record-keeping. It's all about managing money and resources for future growth and stability. Finance covers investing, borrowing, lending, saving, and forecasting, all activities designed to maximize value and support long-term goals. In essence, finance helps individuals and organizations make smart choices about how to use their resources, whether that's planning retirement, funding expansion, or reaching government objectives. Let's explore the main functions that make up the discipline of finance. Key functions in finance start with investment management. Professionals in this field oversee portfolios, collections of stocks, bonds, and other assets to meet specific financial goals. Asset allocation means balancing risk and returns across different types of investments, ensuring that portfolios grow while staying resilient. Finance also involves capital raising. This can mean issuing stocks for equity financing or borrowing through debt financing to support expansion or new projects. Another vital area is financial planning and analysis, or FP&A. Here, finance experts use modeling to forecast tomorrow's financial performance, supporting strategic decision-making that influences long-term direction. But finance doesn't stop there. It also manages risks and assesses value. Risk management is central to finance. Professionals regularly identify a range of financial risks, like market volatility, credit exposure, and operational challenges. Once these risks are mapped out, finance teams put strategies in place to mitigate them, protecting the organization's assets and reputation. Valuation is another pillar of finance. This involves determining the worth of a company, whether during mergers and acquisitions or for investment opportunities. Asset valuation goes even deeper, assessing the value of individual investments or business units, guiding smart capital allocation. Now, let's look at who performs all these finance functions. Finance professionals wear many hats. Financial analysts delve into data to support investment decisions and strategic planning. Investment bankers help companies raise capital and advise on transactions like mergers and acquisitions. Portfolio managers steer investments to achieve specific objectives. Financial planners offer advice on personal finance management, from retirement planning to investments. Risk managers step in to identify and control the financial risks facing a company. Let's move to the tools and methodologies that power financial decision-making. The finance field uses a robust toolkit. Financial models help forecast future outcomes, simulation software enables scenario analysis, and platforms like Bloomberg or Reuters deliver market data for investment decisions. These tools empower finance professionals to make sense of complex information and respond quickly to changing business environments. Having covered the foundations of accounting and finance, let's see how these fields interact and complement each other in real business settings. Accounting and finance may seem distinct, but they're tightly intertwined. Accounting provides accurate and timely financial data, which is the fuel for finance to make critical decisions. There's strategic alignment too. Accounting ensures compliance and reliability, while finance translates that information into growth strategies. For example, during budgeting, accounting produces reliable historical data and recommendations, while finance uses that budget to guide investments and allocate resources. During mergers or acquisitions, accounting delivers necessary records, while finance assesses value and risks to determine the best course of action. Let's sum up the main differences between the two fields before we wrap up. So, what sets accounting and finance apart? Accounting centers on precise record-keeping and compliance, providing a historical view of all transactions. Finance, meanwhile, is forward-looking. It's about strategically managing resources to maximize value and achieve goals. While both are intertwined, understanding their distinctions allows businesses to leverage each field's strengths for better decision-making. Let's bring all of these insights together in our final thoughts. As we draw to a close, it's clear that accounting and finance are not just different, they're complementary. Accounting ensures that businesses operate transparently, adhere to regulations, and maintain an accurate history. Finance uses this foundation to plan, invest, and grow, always looking toward the future. Recognizing the unique contributions of each field can greatly enhance business strategy and drive success. Thank you for watching. If you found this topic helpful, please consider subscribing for more insights on business, careers, and financial management. Feel free to leave any questions or comments below. I look forward to continuing the conversation.